So in this video, I want to give an update on my investment portfolio. I've done that a couple of times. Done previous videos. I did an update at the end of 2023, and also I did it way back, I think, in 2021. And both of those videos have been pretty popular. So I do want to go over the portfolio progression since I started investing in 2018. So as you can see at the start of my investment career, I only had $37,000 to invest. I then grew the portfolio slowly but steady, having 64K at the end of 2019. And the portfolio has been growing pretty well since then. And currently, at the end of 2024, or this is actually at the beginning of 2025, I'm recording this in the middle of February, so this includes almost the first 2 months of 2025. I have now $476,000 in my investment portfolio. My total net worth is, I believe, $840,000, so it's closing in on $1 million, but that's including the equity in my primary residence and also my pension funds. But as you can see here, the compounded annual growth rate of my investment portfolio has been 52%. And last year, the portfolio grew by 41%, which is pretty good. So I'm on my way to $1 million, which is a very big milestone for my investment portfolio. I do think I will get there in about 3 or 4 years, maybe 5, if we don't see a huge drawdown in the stock market. So this is the allocation here, and out of the 476,000, I have about 197,000 in stocks, 113,000 in real estate equity, which is a rental property that I own close to my home. And then I have about 94,000 in cash. So the cash position has been building up pretty fast. I do get a decent yield on my cash. I think it's around 8%. So I'm in no hurry to move cash out of that account. And then at the beginning of 2024, I started an investment partnership, which I personally invested 71,000 into. I will do a video later on specifically about that and the concept behind that investment partnership. But it's loosely based on the investment partnership that Buffett started in 1956. In that partnership, I am investing in digital assets like websites and YouTube channels, along with investing in the stock market, much like I'm doing with my personal portfolio. But I will talk more about that later. For those of you who have been following me for a long time, you probably noticed that last year I stopped uploading content, and then last fall I started uploading these faceless YouTube videos, which I was doing some testing. I can assure you that I won't be doing that again, and this channel is only gonna be me talking about the investments that I'm making and documenting my journey. But let's switch over to my personal portfolio and take a look at the positions that I have there. I'm currently holding 14 positions, and when I'm recording this, I am thinking about reducing them to 12 positions. So I'm thinking about selling my shares in Tencent, which I've owned for more than 3 years. And I'm also thinking about selling my shares in Gravity, which I've owned for over 2 years. And right now, I'll probably be adding to Clinica Bavaria, which is a Spanish eye doctor company. And also, I'm thinking about adding to my position in Jumbo Interactive, which is the Australian lottery company. But let's quickly go over the portfolio. And as you can see, my biggest holding is still Meta platforms, which I've owned since 2021. That is currently 24% of my total portfolio, and the current value is $37,000. My average price per share is 150, with the current price being just below $700. So that's a pretty good gain in Metastock in just a couple of years. My second biggest position is Evolution AB, the live casino operator out of Sweden. And they are in a huge drawdown right now, and I've been averaging down. And as you can see, the total cost that I've spent on buying the stock which shows I believe in the company, is $30,000, with the average cost per share being $95, and the current price is currently $78, which is not too bad. The next stock that I have is a 12% weighing, which is Fortinet, which is, in my opinion, the best company in the cybersecurity space. The total amount that I've spent on the stock is $8,900, with the value currently just south of 19K. And the average price for me is $54, with the current stock price being 130. So that's a 111% gain since the fall of 2023. And I will be making videos specifically on all of these companies. But yeah, I picked up shares in Fortinet in the fall of 2023. I think I got the shares for like 20 times EV to free cash flow, and it was a good time to buy into Fortinet. They were coming off a pretty strong growth spurt, and growth had started to slow down. So the stock got oversold, and I took advantage of the opportunity and bought in pretty heavily. So it's very likely that I'll be a long-term shareholder of Fortinet, since I do believe that they are a much better company than their primary competitor, Palo Alto. Now, the next company on the list is Games Workshop Group, which I was buying at a similar time, and I also took another position, a bigger position in the company when I had the chance in 2024. So all in, I've spent $10,700 on buying Games Workshop. But for those of you who don't know, Games Workshop is the company that owns the IP to the Warhammer franchise, which is a very strong franchise. And currently it makes up 9.7% of my total portfolio, with the average cost per share being 127 and the shares being worth 179. So already a pretty steady gain on that, but like with Fortinet, they are very high quality compounder, so I expect them to stay in the portfolio for a very long time. Next up, we have a company out of the UK, which is a fintech company called Wise, which is also very high quality. I was able to buy that during the drawdown last summer. They're already 7% of the portfolio. They've been going up pretty nicely since I bought them for just under £7 a share, with the current price being just under £11. So it was a similar story with Lululemon. They also had a drawdown last summer, and I was able to pick up some shares at the average cost of 275, with the current price being 361. They make up about 6% of the portfolio. Now, like I mentioned earlier, I am thinking about selling Tencent, which is around 5% of the portfolio. I'll go into the reasons why I'm thinking about selling Tencent later in this video when I'm going over the fundamentals. But having held Tencent for 3 years, I do believe that they are still undervalued. So don't get me wrong there. But they might not be as good of a company as I thought in the beginning. Now, another fairly recent addition to the portfolio is OTC Market Group, which is a high quality company as well. And they always seem to be trading at a pretty low premium. And they do pay out high dividends, and they also pay out special dividends. But I'm hoping that Cromwell Coulson, the CEO, which owns about 30% of the company, I'm hoping that he'll start using his value investor skill to acquire more companies and maybe retain more of the cash that the company produces to provide shareholders with better value than just giving the cash back in the form of dividends. But currently they are 4.7% of the portfolio. So that is a position that I might add to at some point, and hopefully I'll get the chance. The next one on the list is Jumbo, that I mentioned earlier, which has mostly been going down since I started to invest in the company, which was about a year ago. But they have very strong fundamentals, as we'll see later when we'll take a better look at the company. But I'm waiting for the results, which are due at the end of February. So I'll take a decision based on that, if I'll buy a bigger position in the company. But I already spent about $11,000 Australian dollars. I'm not sure how much that is in US, but it's a pretty big sum. So next on the list we have Adobe, which I think most people know that are watching this video. But unfortunately, I bought into them 2 years ago, and I was only able to get a small position before the price ran up again. I thought I'd maybe get another opportunity a couple of weeks ago when they started to go down, but the stock seems to have stopped at, I think, 23 or 4 times EV to free cash. And I'd be willing to buy more shares if they dip below 20. The next position on the list, which I only have a starter position, and like I mentioned, I am thinking about adding to my position there, is in the Clínica Bavaria, which is the Spanish eye doctor company. The company is performing laser surgery to correct nearsightedness and other surgeries like that. And they've recently expanded into the UK as well. So a very promising company, and they are also releasing their earnings at the end of February. So I'll make my decision then if I'll be selling other positions to take a full position in Clinica Bavaria. Next on the list is a company that most of you that are on FinTwit know pretty well, Constellation Software, and I only have a small position in Constellation, unfortunately, since they never seem to go down to a price where you can actually buy a big chunk. And then we have Technion, the serial acquirer out of Sweden, which has had a very tough year in 2024. And I'll make a separate video about that very soon to go over that and kind of give you my thoughts on what's going on with the company. And finally, we have the South Korean gaming company, which I've held for I think 2 years, and I'm thinking about selling. It was supposed to be an arbitrage investment since they were trading so close to their cash position, but like you can see, that hasn't really panned out. So my next move is going to be selling and then allocating it either to Jumbo Interactive or to Clinica Bavaria. We'll see. And these are the ratios that I look at to be able to see quickly how my companies are doing. And as you can see here, the weighted average value of the free cash flow growth per share for the last year is 12%, which is pretty decent, and 20% for the 3 year and 27% for the 5 years. So on average, all of my portfolio companies are growing at a pretty good pace, especially if you consider that the enterprise value to free cash is just around 25, which is not that expensive. And the weighted average value of the return on invested capital is 42 for the portfolio companies, which is a very important metric. If you sort by return on invested capital, we can see that some of the companies in the portfolio are doing better than others, and ideally I want to have all of my companies doing return on invested capital at 20% or above. But as we can see, Tencent is only at 12%, although they are growing and they are becoming a better company compared to what they were when I bought into the company. But companies like Technion and Constellation Software are, in my opinion, delivering too low return on invested capital. So we'll have to watch that one closely. But on average, the companies in the portfolio are doing 41% return on capital employed, and they are getting better since we see that the return on capital employed for the last 5 years is on average 33%. And the margins are pretty high, on average 56%, and most of them are stable or have growing margins, which is something that we want to see. The operating margins on average are 38%, and most of the companies have growing operating margins. The free cash flow margin on average is very strong at 45%, with Technion being the only company that has a free cash flow margin in the single digits. Most of the companies in the portfolio do not carry a lot of debt, where most of them are debt-free. Only the serial acquirers like Technion and Constellation have lower interest coverage than 10, and most of them have very high cash to debt ratio. None of the companies in the portfolio are diluting shareholders to a meaningful extent, and they are, on the contrary, most of them are buying back shares and reducing shares outstanding, except unfortunately for Technion, but they've been diluting shareholders by issuing new shares in relation to some acquisitions that they made. I believe it was in the summer of 23, if I'm not mistaken. On average, these companies have a pretty strong revenue growth per share. And it doesn't matter if you look at the 1 year, 3 year, or the 5 year, they are doing pretty well in that regard. Um, except maybe Tencent, which in my opinion, the revenue growth has slowed down too much, with the 3 year average growth being only 5%, which is too low, and that is one of the reasons that I'm thinking about selling the company. Finally, if we sort the portfolio by market cap, we can obviously see that the biggest company in the portfolio has a market cap of $1.7 trillion. So you have to ask yourself, with Meta being my largest holding, is it gonna grow much more at a similar pace in the future? That is something you have to consider at all times if you want to reallocate maybe some of that money to other positions. And Tencent is also getting pretty large and growth slowing down very much, as I mentioned earlier. But for the rest of these companies, I do think they have a pretty good runway ahead of them. So, just to summarize, I am very happy about the positions that I currently have, but I will likely make some changes and reduce the holdings down to 12. And you never know, I might be buying something off the watch list as well.